You've been beating the drum on this really hard, that the recession playbook still counts even in an environment like this. What are you seeing?
Well, that's right, John. I mean, obviously every recession is different. It usually is accompanied by, some exogenous shock. This time it happens to be a health crisis. You could go back to the prior 4 or 5 recessions, and it's always easy to identify what that exogenous shock is. I think clearly because it's a health crisis, maybe people are a little bit more concerned, but the reality is the market doesn't have any feelings. The market is not emotional, and the market is following its typical playbook, is that when you get a cascading economy like we've had and a market crash like we had in March, there's going to be a reflexive rebound, and that's what's happening. And we've actually been quite encouraged and surprised even to some degree just how closely the patterns have followed the typical playbook. And so we're going to continue to trust that until we see something otherwise.
Mike, I don't know how much attention you should pay to one morning's price action, but I was quite surprised to see the equity market as high as it is this morning. What do you think is behind it?
Yeah, I mean, I would agree to some extent. I think part of it is the fact that sentiment has remained decidedly bearish over the last month and a half and skeptical. And I think what we're seeing now, John, quite frankly, is a capitulation on kind of that theme I was just laying out. I think a lot of people were fighting that typical playbook because they just didn't want to trust it given the nature of this crisis. And now they're realizing that, you know what, it is the same and I missed it, and now I got to get involved. So this is probably the bad part of the rally, meaning this is the low-quality part of the rally where you get a breakout above the 200-day moving average, you suck everybody in, the trend followers, and then we'll probably have some sort of corrective activity following this. It's also right around a holiday period, which tends to be, less liquid, and you get these kind of moves up or down depending on the direction of the market. So I think this is kind of the final piece of wave one, if you want to call it that, off the lows, and kind of a necessary condition. But it's not bearish. It's like I said, it's the final move of the first wave up.